All right, in this module, I want to cover how to properly track all of the cryptos that you hold, because it can get sort of chaotic when you're buying things on different exchanges, buying and selling and transferring money around. I'm going to show you a one-stop solution that is going to allow you to make sure you're tracking all of the things that you're holding, and then also implementing that with your trading Excel sheet that you track all of your trades in your investments on. We're going to take a breakdown of all of those things. I'm going to show you how to keep track of everything so you know exactly where you stand and how much money you have in each investment vehicle. All right, so basically CoinMarketCap allows you to create different portfolios over here, and then anytime you do a transaction, you just add it in here, and it's going to show you exactly what you're holding, how much of what you're holding, and when you're buying and selling, and the profit on this as well. So unfortunately, a lot of the times what I've done is transferred money in from other places here, and it's been off of like MetaMask or other places where I can't track the average price. I don't know why the crypto industry does that, where they make it so hard to figure out what your average price is. So some of these aren't accurate, but if you're new to the game or have a way to find all of the average prices, you can basically go into each individual thing, add your average, add all of your transactions, and you can go back and check everything, all the profit, and you know exactly where everything is. Okay, we also have our spreadsheet to manage trades. So the active trades over here, swing trades, and then investments over here. But I do want to focus on CoinMarketCap because you can essentially do all of your investing stuff over here. And this is more so just how to balance your entire portfolio. So if I were to add to an ETH position, I could just go over here and click on my ETH position, hit add transaction. And if I were to buy, one Ethereum at an average price of this, I can go in here and then I can hit add transaction. That's going to add a transaction and update all the stuff on my entire portfolio and show me basically my new average price and how much profit I am up on each individual holding. All right, you can also hit allocation over here to figure out exactly how much you have in each thing. So it just gives you a quick snapshot of all of the largest holdings that you have, and you can just go through here and really just track all of the individual holdings that you have and see basically where you're at. This is going to allow you to not be confused. And also another cool little feature that I forgot to mention, if you go into here and you hit add transaction, you can actually add a note into the transaction too. So if you transferred in from like MetaMask, sent from David or something, this will help you sort of keep track. Oh yeah, David sent this to me, I imported it here. Just a lot of things to allow you to just keep track of exactly what you have going on. At least in your portfolio that's not locked in cold storage. Like I have crypto in cold storage that I've just forgotten about. But as far as the manageable stuff so that I can track exactly where I need to be moving things and where it's came in, this is a good way to do it. All right, guys, in this bonus module, I'm going to be discussing how to structure a personalized portfolio based on your specific needs. Okay, how aggressive you want to go, the duration that you're planning to hold these cryptocurrencies, how much equity you have, and what your objectives are. So we're going to kind of go over some different portfolio types and allocations based on what you're looking to do. It's going to give you a nice balanced holdings rather than just buying random things and not really knowing what your objectives are and hoping that it turns out. Obviously, everyone's going to be a little bit different, so you can tweak this to be specifically what you need. But I want to give you a rough overview of what I would recommend to do based on how aggressively you're trying to invest, what your needs are, and how much money you're using. All right, so trading is one thing, but structuring yourself so that you have a good long-term portfolio or portfolio in general that fits your needs is very important. So I constructed a conservative, a moderately conservative, a moderately aggressive, and then aggressive portfolio structure to sort of run through some examples of what you can do with your holdings to be very, very conservative or very, very aggressive depending on what your timeline is and what your objectives are. So typically, to sort of go over how this usually works, the younger you are, the more willing you are to take financial risk because you have time on your side. So you can sort of leverage yourself in things that are going to take higher up and down swings to be able to open yourself up for more long-term growth potential rather than trying to make sure you don't lose or gain too much money. basically once you have more money and you have less time on your side, you don't want to be so exposed to volatility, so you'll tend to move more conservative as you age and as your portfolio increases in size. So in my situation, I'm 23 years old, but I know I have time on my side and I'm okay with market volatility, so I have an extremely aggressive portfolio right now. But depending on your age, if you're in your, mid to late 30s, or even in your 50s or 60s, you're probably going to want to adjust that based on the time horizon that you want access to your money and the volatility you want to be exposed to. So as you age and as you have sort of a shorter amount of time on your side, you want to sort of gradually move to more of a conservative portfolio, so that if the market drops by 50%, you're not losing hundreds of thousands of dollars. So first, let's start off with an extremely conservative portfolio. So basically, we would have 40% allocation to large market cap cryptocurrencies. So you can go on coinmarketcap.com and look at all of the major large cryptocurrencies that are leading right now. It's going to be basically BNB, XRP, Bitcoin, and Ethereum. Those are going to be your large market cap cryptocurrencies. So we want to have 40% allocation in different cryptocurrencies. That's going to give you some nice solid growth potential, but you're still going to be in reliable cryptocurrencies that are most likely going to prevail if the cryptocurrency market continues and doesn't just vanish into thin air. Then the other 60% of your portfolio could be spread into low fixed rate API DeFi stakes, which basically will give you a yearly API on your money. So this is basically the equivalent to bonds in the stock market. So you want to basically have your money in something that's giving you a fixed rate of return for staking your money, and then have the larger, more mainstream cryptocurrencies as your 40% allocation to drive the growth, but drive it safely and conservatively. Next, we'll go over to the moderately conservative portfolio. That's going to have 4% micro market cap altcoins. So basically, all of the very, very small cryptocurrency altcoins that we talk about that are super speculative plays, you want to allocate a very small percentage into those cryptocurrencies. But that's going to drive some sort of growth and exposure to risk, but it's only 4% of your portfolio, so it's no big deal. 12% of your portfolio is going to go into small market cap cryptocurrencies, 18% into medium market cap cryptocurrencies, and then 42% into large market cap cryptocurrencies, and then have a 24% allocation into a fixed low API DeFi stake. And by the way, when I'm saying low right here, I mean low risk, low yield. So next, we're going to go over a moderate portfolio. This is going to have 35% large market cap cryptocurrencies, 5% small market cap cryptocurrencies, 2% micro market cap crypto altcoins, 18% medium market cap cryptocurrencies, and then 12% allocation into one fixed low risk, low reward API DeFi stake, and then another 28% into another low risk DeFi stake. Moderately aggressive portfolio. This would be for someone who wants to take some risk but doesn't want to face as much volatility as someone who's just swinging for the fences. Is going to have 47% in medium market cap cryptocurrencies, micro market cap altcoins, 6% allocation, only 3% in low risk DeFi stakes, 24% in large market cap cryptocurrencies, another 6% in fixed low API DeFi stakes, and then 14% allocation into small market cap cryptocurrencies. This is going to give you a lot of driving growth potential, but it's not going to be swinging for the fences as much as an aggressive portfolio, because you still have those DeFi stakes, you still have the large and medium cryptocurrencies to drive your portfolio forward and hold some sort of value long term. And then the extremely aggressive portfolio for someone who has a lot of time on their side, that's looking to really swing for the fences and take on some risk but have higher chance of reward. This is sort of where my portfolio sits. 55% large market cap cryptocurrencies, 10% micro market cap altcoins. I always talk about 1% allocation coins. Okay, this is exactly what I'm talking about. Pick 10% and just put, 0.5% or 1% into cryptocurrencies that can 1,000x. And before you know it, you only have to be right about one and you're making substantial gains on your portfolio. 5% small market cap cryptocurrencies, and then 30% medium market cap cryptocurrencies. And this is going to be a very aggressive portfolio for you to really swing for the fences, no times on your side, and try to really leverage so that you can increase your portfolio value very quickly. But I just wanted to kind of go over some of these models so you can start to get into some DeFi projects and mix your cryptocurrency portfolio around depending on how aggressive you're looking to go on your returns. And then, like I said, as you age and depending on how much time you have on your side, I would say in your early 20s to mid 20s, aggressive is normal. In mid 30s to late 30s, I would say either moderate or moderately aggressive would be pretty good. And then into your 40s and 50s onward, I would say moving into a moderately conservative to conservative portfolio. I'll probably be sitting right in this conservative portfolio when I'm about 40 to 50 years old, where I'll hold, Bitcoin, Ethereum, all those large market cap cryptocurrencies or whatever, BNB. And then I'll have most of my money just yielding me a fixed low rate API on DeFi stakes. So I know I have consistent income that's coming in, not a lot of volatility exposure, but I still have some growth in large cap cryptocurrencies. But I figured this would just be a good way to sort of give you some sort of structure on how to create a portfolio for yourself based on your objectives, your time horizon, and the amount of risk you want to take on.
Welcome to Section 3, where we will be covering DeFi, or decentralized finance. There are a lot of things that shape decentralized finance today, but it's still very young, so there's a lot that will change in the future. What makes finance different on the blockchain is that you don't need an intermediary bank or broker or any custodial service for your funds. When it comes to decentralized finance, you're the one behind the wheel. So this section of the course serves to make an outline of how you can use decentralized finance properly to make good investment decisions. We can gain passive income with cryptocurrency in a multitude of ways. The reason we do this is so that not all of our funds are at risk of being lost in trading or other means of taking advantage of the market that requires your focus and attention, and also proper risk management. Using decentralized finance by staking, yield farming, or anything else also serves against a hedge against volatility. It does this because your time horizon, in conjunction with your positive yield, makes it so that the noise is reduced when it comes to your entire portfolio. So we've gone over how DeFi can help you diversify your portfolio and why you might want to look into it as a financial instrument. Now we're going to take a look at a few examples so you can visually see what decentralized finance is like right now. So here we have a DEX, or a decentralized exchange. It's a cryptocurrency exchange governed by smart contracts on the Ethereum blockchain. To trade on a decentralized exchange, there is usually a wallet button towards the top right that allows you to connect to your MetaMask wallet. This does not allow the website or the decentralized exchange to do anything with your funds. It should simply allow them to interface with MetaMask in order to ask for certain transactions to take place for you after you've selected what kind of transaction you want to make, such as buying or selling a cryptocurrency. There are a lot of decentralized exchanges, and they all look very similar. As you can see on this site, 1inch, you're able to connect a wallet and select your network to trade on. Most decentralized exchanges take place on the Ethereum blockchain, but now there are some other chains. For example, if you're trading with BNB or anything on the Binance Smart Chain, you would choose this, or anything on the Matic Polygon network, use Polygon. If we click MetaMask, for instance, it will ask us to log into our wallet, and after we do so, we connect MetaMask to the decentralized exchange. As you can see, they told you what kind of permissions they required, so you know exactly what's going on. Since there's so many decentralized exchanges, it can be difficult to find out which one to use. But what's most important is that you make sure the decentralized exchange you're using is safe to use. For example, on 1inch, we can go to the About section, Scroll all the way down, and we can see that there is an audit. This is an open source audit on GitHub that goes over all of the smart contracts used, which has been audited by many organizations. Now, there are some concerns regarding decentralized finance that come to mind anytime when using cryptocurrency. For example, sometimes fees may vary from day to day depending on the volume of transactions. This can especially be important with liquidity pools that involve smart contracts. These smart contracts on the Ethereum blockchain require gas fees. Fees for smart contracts can sometimes cost over $100. Your transaction is unlikely to never be confirmed, but when choosing lower fees than what's recommended, it might take a very long time to get your transaction confirmed, and it may expire if it's a smart contract. Another problem is obviously losing access to funds or forgetting your private key to your wallet. There are various circumstances in which this could occur, such as a compromised smart contract or sending your funds to the incorrect address. We must follow best practices, and that includes double checking wallet addresses. Make sure to find out as much as you can about the project you're putting your money in. And don't put any money into anything that's sketchy. Make sure you actually read audit reports and understand how the decentralized exchange or decentralized application works. Now that we've covered many of the various concerns in decentralized finance related to what we're going to be showing today, I'd like to showcase some of the many ways you can earn yield through blockchain technology and cryptocurrencies. So since there's so many ways to earn yield in the decentralized finance space, we're going to cover different categories of risk to better help you understand what you may be interested in. The higher risk option we're going to be covering today is Compound, and showcasing how you might use it with actual cryptocurrency. So this is the Compound.finance decentralized application, and as you can see, there's two main components to this dApp. One being the supply markets, in which participants stake their cryptocurrency for a yield over time that is secured to them over a smart contract. And on the other side, we see the borrow markets, where you're using collateral to obtain more exposure to cryptocurrencies, increasing your risk. It's similar to margin trading, and if you're unfamiliar with how margin works, we'll be covering that as well in another slide. How Compound works in its governance is based on the voters that hold Compound. If you hold Compound, then your voting power is 1-to-1 with the amount of Compound you hold. This allows you to participate in the passing of updates to the Compound system. As Compound is still very young, a lot of it has to do with making updates or optimizations. So votes tend to conclude unanimously in most cases. We can see the user distribution of those supplying and borrowing tokens against or with Compound. So like many decentralized applications, Compound creates its own token that plays a role in the borrowing and supplying of different cryptocurrencies. Next, we're going to be covering a medium risk passive option that might present more of an ability to access funds without much impermanent loss that you might experience when borrowing in something like Compound.finance. For this example, we're going to be using DHedge, which is a decentralized hedge fund aggregate on the Ethereum blockchain. I did add exchange earning, but this is not technically a decentralized finance option, and it includes some risk as it is on a centralized server rather than a blockchain smart contract. This presents its own unique risk when compared to the risk of a smart contract. This is DHedge, a place where pool managers create pools that mirror their own investment ideas. A pool is a collection of different exposures measured in a percentage of an Ethereum wallet. The contract Ethereum wallet is mirrored to a token smart contract that you can simply buy instead of constantly rebalancing the percentage of exposures every time they're changed. This allows you to have a sort of hedge fund token managed by others so that you don't have to allocate your time and focus to the market. A few months ago, DHedge created a token that automatically rebalances itself while comprised of multiple portfolios constructed by multiple pool managers. This index is rebalanced on a monthly basis to match best possible index composition of pool managers. The Sortino ratio is a method of filtering out pool managers that are taking on too much risk, causing their drawdown over time to be too volatile to be in the collective index. We can see that the index has different percentages of pools, these pools each being a different tokenized portfolio that rebalances themselves. And we also see the overall exposure of all of these pools measured in percentages. If we go to a single pool manager, as you can see with this pool manager, there is a 3% performance fee and a 7.3% performance mining yield. This means that 3% of the profit from the pool when investing in this pool is given back to the pool manager, but 7.3% of this token that you stake for liquidity is given back to you in the form of a DHT token. Like the compound token, the DHT token is the DHedge token and is also used similarly in governance. This is one similarity you'll find with many decentralized applications, is that they have a token that is used in a voting mechanism for what they change. So if I wanted to invest in DTOP, I would have to get Synthetix USD. To get Synthetix USD, you would swap one cryptocurrency for the Synthetix USD stablecoin that mirrors the dollar. This stablecoin will appear in your wallet, and then through DHedge, you can stake through their smart contract. Of course, before investing in something like DHedge, it's best to get an understanding of the system by going to their documentation and finding the audits. Next, we're going over a lower risk option, namely Cardano staking. I will showcase how to stake Cardano with the Daedalus wallet, an open source wallet on GitHub. As explained in previous section, Cardano staking means you're locking up some of your coins for a while in order to authenticate other people's transactions on the network and gain yield through mining blocks in a pool. I just wanted to throw in a disclaimer about the Daedalus wallet. Using a software wallet on the Cardano blockchain can present some wait times while waiting for the blockchain to synchronize with the public ledger. To get the wallet I'm using in this demonstration, you must go to daedaluswallet.io. You download the wallet just like this, and then the executable will be in your downloads folder. So after installing Daedalus mainnet on your computer, you'll be prompted with some questions. These questions must be answered before creating a software wallet. You must also accept the Terms of Service agreement. Now that you're in the Daedalus wallet, you'll see at the top right that blocks are synchronizing. The percentage of blocks synchronized must be 100 in order to fully use the Daedalus wallet. So while we're waiting for the blocks to synchronize, we will create a Cardano wallet. We click on create, enter a wallet name, a password, and we confirm that nobody can see the screen. Write down this recovery phrase. After you've written down your recovery phrase, you click this and type it in. Next, you have two checkboxes to click: understanding the risks of holding a wallet on your computer or having a recovery phrase on your computer, so you press confirm, and now you have the wallet set up. Now that we have the wallet set up, we can start receiving Cardano even if the blockchain is not fully synchronized. So now that we have Daedalus synchronized with the public ledger, we can see some new stuff in the Daedalus wallet, such as your Cardano that you may have sent to yourself while waiting, and possibly an icon here showing that the Cardano network is fully decentralized for block production. So the stake pools are the only source of Cardano blocks. Let's go over to stake pools. We can see that with the Daedalus wallet, there's a slider that allows you to choose an amount of Cardano you want to stake. And then it finds you a suitable pool. So for this example, I'm going to be using a low saturation, high ranking stake pool to delegate to. Now we have our wallet delegated to this stake pool. All the Cardano in our wallet is being used in this staking pool to mine blocks. We can go to the rewards section to find out what address will contain our staking rewards, and the delegation center shows you the epochs. As you can see, participating in decentralized finance can be very easy, but it must be understood that it takes time to see the great benefits of these types of systems, and also a great understanding. The period you have to have your funds unavailable varies from decentralized application to decentralized application. It could be a month, it could be a week, or you might be able to get out immediately. The risk and staking period need to be considered when determining the time horizon of getting your goals accomplished. You might notice in decentralized finance, many different stablecoins are used. Sometimes a decentralized application only uses one stablecoin, and sometimes they'll have liquidity pools for almost each and every one. Most stablecoins work differently, so you have to assess their risk on a case-to-case basis, making sure to look at the documentation and the organizations possibly behind the stablecoins you're looking to hold or use. Now we're going to quickly go over margin. Margin is a way of borrowing by putting up an amount of stablecoins or crypto as collateral against what you're borrowing. It is used to leverage more buying power and amplify the gain while increasing the risk. In margin trading, you can lose all of your collateral, so you must protect your position with stop losses or only use as much collateral as you are willing to lose. Finally, we're going to quickly cover the differences between a couple futures contracts so you can better understand what's going on when you're futures trading or doing anything with margin. All contracts in cryptocurrency is perpetual, meaning they don't expire and they keep running. There's no daily trading window. Sometimes traders trading cryptocurrency will choose to use an inverse swap contract. An inverse swap contract means you are not borrowing coins against stablecoins collateral. Instead, you are using coin collateral to borrow more coins. So, if you have a balance of 1 Bitcoin and your position size of the trade is 3 Bitcoins, then at an entry point of $100,000, your long collateral would be taken away from you if the price goes down to $75,300. Many exchanges will have a liquidation calculator for you to know your liquidation point. I hope this video helped you understand decentralized finance and more about cryptocurrency trading.
Welcome to lesson 8. In this lesson, we're going to be learning how to log our trades and evaluate our personal trading information. Something that a lot of people glaze over when they're showing people how to trade is logging your own trade information, organizing your trade information, and being able to evaluate it statistically so that you can improve over time and see what your deficiencies are. Okay, it's one thing to take trades and just guess what you're doing. It's another thing to be able to look back on your information, log it, and be able to make adjustments in your behavior based on statistical trends that you evaluate through evaluating your own trading. If you don't do that, you're not going to be able to improve, and I'm going to show you the pre-built template that I put in the bottom of the course as a tool for you, how to use it, and basically how to optimize your trading. So this lesson is very important. All right, so now we're going to go over how to use the trade log backtesting sheet. So I built multiple sheets for you to use. One shows you your stats, so your winning percentage, wins, losses, average win, average loss, average P&L per trade, and total P&L for longs and shorts. So I coded all of this in so that basically you just enter it in a certain place, a few certain places, and all of this auto populates. So basically, you're going to go over to your main log right here. This color over here is going to establish whether or not you made money on the trade. So if you had a profitable trade, you keep this green. If you're taking a short trade, you want to keep this red because it's conditionally formatted to be able to tell if it's a short or a long. And it just helps with the visual representation. Okay, I shorted this stock. I made money. I shorted it. Here's my P&L. So when you input a value, like if I put 100 in here, that's automatically going to change my total, my number of wins, and my total trades and my winning percentage. So you can see right here, if I take this and turn it into a negative value, we're going to see a 50%. We're going to see that even out, and we're going to see the P&L drop. Okay, so you need to change that depending on whether or not you make money. And then you just basically input the date right here, the pair you took right here. So if you took, let's say we took Ethereum USD, put that right there. Let's say we shorted it and we made $300. So we're going to go 300, put that in there. That's going to auto total that, show us our winning percentage. Then what we want to do is we want to come over to here, basically take our Ethereum chart. If you have a Windows, you can literally go down to hit here and hit S, go over here, click this, click and drag over here, boom. If you hit Control S, you can hit enter. Now we go back over to our drive where we have our trade log right here. We can right click and delete this. Then we want to go over here and go file, or actually insert image overcells. You want to make sure you go image overcells, because if you go image in cells, it's going to screw it all up. So you go image overcells over here, then you just go browse. So you can go through your recents, then we can go to ETHUSD right here, boom. Now we have our Ethereum chart populated right up here. So obviously resize this however you feel fit. So you can click and drag these in between the brackets right here. But now you get to see the breakdown of, okay, here's the date, here's the P&L, here's the pair, here's the short side or not, here's my P&L over here, type of short, you can just go channel. That's just for like extra if you have different types of trades that you're taking. Then it's going to auto calculate everything over here. So you can see visually, okay, on this day I took this trade, I lost, that's the reason. Here's how much money I made, etc. Okay, and you just keep going down the list. Okay, if you want to, you can just you can hit this, right click, duplicate, and then you can duplicate these and make it for each month. So if you want to track by month, you can literally go over and just duplicate the page, duplicate both of these, and then track it by month. So you can stay nice and organized. That's going to help you organize everything. So each month you can basically take this total here and you can just you can literally just capture that amount. Boom, here are all my stats right here. You copy that, you put it over into one simple Excel sheet where you just have it, here's my month result, then you auto total all of them, and then that's your year result. Okay, then it keeps it so much more organized for every single function basically, and that's exactly why we need to stay organized. So that's how you use it. The reason why we're logging trades is to show you how to look at your trading system and see what needs to be changed within it in order to create better profits. So for example, let's say we go in here, we can go over to our stats page and we can see where we're going wrong. Okay, so our longs over here, we have total longs, 0 wins, 1 loss. Okay, that means that we have a 0% win rate. Obviously, if you take more trades, that's going to change. We can look at our average win, our average loss, our P&L total for all of our long trades, and the average per trade P&L we can see right here. So we can evaluate our averages and see trends. So like, oh, last month, I took more shorts. Why was that? Did that work out? Is that a good idea? And you can start taking notes on yourself and logging it and say, I took more shorts when the market was going up because it was into overextensions, but it turned out to be a bad idea. That's something that you can look at so that you can evaluate your own performance and improve over time. All right, guys, in this module, we're going to be going over a slightly more advanced Excel sheet that actually one of our students who have corporate experience in Excel designed. He spent over 100 hours on this. So of course the free Excel tracker where you can manage all your trade information is going to be amazing, but he did show this to me and I looked at it and I was like, this is incredible. So I wanted to show this to you guys. It's going to cost $47 because we felt we wanted to give Andrew some of the money for creating this product. So we're just going to run through how it works and all the benefits of this sheet. I actually have Andrew on Zoom right now, so he's going to go over exactly how to set everything up and just run through it because he's created it. He knows it better than anyone. Okay, it's awesome. And yeah, we're just going to dive right into it.
Yes, I appreciate it, Craig. Man, it's been fun joining the Innovatrade team and the training that you provided. I so appreciate it. And the reason why I created this tracker is because even though we have the free one that you designed, I looked at it, and with my background, like you said, over 6 to 10 years of corporate Excel, or like we say, wizardry, I just started making one for myself, and then realized, wow, this is actually something that could really help people, and it's really helped me in my trading journey. And so let's just kind of talk about it. So first off, as you see here, this is the tracker has multiple tabs at the bottom. So the first is the system tab, and you're going through this course, you understand that there's a psychology behind trading, and this is designed to make sure that we as traders follow the system that Craig put together and the system that you're trading, and also note key observations in your behavior and trades, so maybe you can adjust and get better and improve, but not sacrifice your rules and your guidelines and things. So here's a spot where you can actually type in the Innovatrade crypto system, the different rules that you're trading. I like this key trade observations. One of the things that I do is review my trades on a weekly basis and look at what are the results of my trades, and like Craig talks about in the system, journaling, your trades, screenshotting them, looking at it, why did you do this? And so I like to go back and review those and note any key observations and things that I see, any patterns and things like that patterns in the price action, my trade setups, patterns in my behavior, what I was thinking. And so I just go through here and it's a great place for you to log how you're feeling, what you're thinking, what you're seeing. And eventually some of those trade observations might become personal trade rules. The Innovatrade system is awesome. I'm very appreciative for it. But it's not inside of my head, right? There's things inside of my head that I'm dealing with when I'm trading that I need to be mindful of. And so I put those here in my personal trade rules, and you certainly can do the same thing. It's a great benefit. And then the routine. One of the mentorship sessions that Craig did, he was able to talk about his routine, and I think it's important to have a routine. And you could put in here, what are the steps that you do on a daily basis or every couple of days to look for your trades and to execute your trades. And then there's just a simple spot for some to-dos. If there's something that you think of while you're here, just jot that down. And this is really, I think about this tab as like going home, right? Like, okay, I'm back home. What am I trying to accomplish? Here's my safe zone. I want to stay within these guidelines and move forward. The next table, this was one of my favorite things, probably one of the coolest things I've ever done in Excel, and that is a target profit table. Craig talks about having a statistical advantage in trading and having a system that you can depend on if you just follow those guidelines that you have in your system. And while we start to trade, we'll begin to have these statistics, right? And what's the bottom line of this tab? It's to make money and see what do we need to do to make the amount of money that we want to make. Because I joined Inevitrade and I was like, man, I want to make a certain amount of money. What do I have to do to do that? And so here we have our risk and reward, which you're learning about. Your win percentage is going to matter. What are you risking per trade? How many of your trades go full profit? These aren't actual trades, by the way. This is just a template. Your trades that go full profit, your trades that don't go full profit, how close to the target profit did they get, and how much are you paying in fees? Now, what's really neat about the spreadsheet, and we'll show you this, these numbers actually pull in from your actual trades. So, and we'll take a look at that. So over here on the trade log, when you come in here and you enter in a trade, very simple, the date, the system you're trading, the ticker, are you going long or short? What time frequency are you using? What percent are you risking? So this is really nice because when you set up a trade in TradingView and you do the trade idea, it's going to show you on your trade idea what percentage of price action movement is needed to hit your stop loss and needed to hit your reward. So you just put those numbers right in here in your entry, and it actually is going to give you some of these targets right here. So you enter in your trade idea, your risk, your reward, your entry, how much money you want to risk, and then it gives you how many you need to buy to execute that trade strategy, where you need to put your stop loss and your target. Fantastic. And then once your trade gets filled, just come in here and put a Y in here. Yes, it's filled. Did you use leverage? Yes or no? And then when it finishes out, what was your profit and loss? Did you have a positive or a negative? And then also your fees. One thing that people don't think about so much is how much they're paying in fees and profitability. We definitely want to account for that. And so these numbers, these metrics, not only do they aid you in more efficiently setting up your trade, but they actually pull in data, like I said, back here to your real stats. So this thing is running calculations for you. And then over here, you have your ideal stats. And so you can look at, okay, here's my real stat. I'm doing 2.95 risk reward. Maybe I could do 3. What if I bumped it up to 3.2? My win rate here is 63%. What if I bump that up to 65, right? Average risk, that's going to be based on your trade frequency or time frequencies and trades that you're taking. So that's not super controllable, except if you start trading different time frequencies. Full profit, and then profit deviation. You see that when you change these numbers, you see this starts to change. You notice that. And what this is telling you how much money you're going to make based on these numbers. So these are your real stats. These are your ideal stats, the ones that you want to be. Over here, you put in your portfolio value. Maybe you're trading, $10,000. Maybe you're trading 5,000, and your target profit is, to take that $5,000 and make $2,500 with it. Well, with these stats, we're seeing some green cells here that say you could hit that profit target with these stats if you risk this amount of money per trade and take these many trades. So if you take 30 trades, risking 1.25% of your portfolio value, which is $63 per trade, with these stats, you would make $2,565. Now, to do that, based on your average risk per trade, you would need to position size $3,100 per trade, or if you used 5x leverage, $625. So obviously, this is a lot of information coming at you guys. I'm sure there'll be support on helping you know how to use this thing. But I just think it's so cool that you can come in here and look at your stats and your profitability for sure. It also takes your data and puts it into a very simple, what we call simple stats, or your dashboard, as far as your profitability on a daily basis. How many losses have you had? How many wins? How many total trades and your win percentage? What's your profit and loss on those trades, minus the fees we talked about, and then your total full profit. And so you can see here, this is just a daily breakdown. So we made $438 on our trades. and then we see each day, you know, what days were good and which ones weren't. And then we see the win percentage on that day. Very helpful. It's nice to see where you're at. You can come in here and you can go date filters, and you can look at, you know, last month's profitability, this month's profitability. Really cool tool. Now, let's say you're looking at this and you're like, okay, well, you know, maybe I'm not doing so good, or I'm not doing as good as I want to. How can I improve? And that's where the next tab comes in, and that's the advanced tab. So now you can come in here, and again, all of this data is driven by your trades. So now you have data on, you know, what's your win rate? 64% win rate. We saw that here, you know, 63.6. Over here it says 64. And we see here that, you know what, we've got a 60% win rate on longing positions, and we've got 100% on shorting. Well, we know statistically with one trade, that's not enough data. This is just a template. But it'll help you start to look into, hey, you know, am I seeing the chart a certain way? You know, the psychology of trading it. Do I want it to go up so much that I'm only taking longs? Should I maybe take some more shorts? You know, and start to look at that behavior. Trade time frequency. You know, your win rate by frequency. Okay, 15 minutes. Maybe I'm losing. Maybe there's an outlier here. You know, you can come in here and you can just make a note. Okay, not going to change my behavior yet, but I'm going to take a look at that. There's a little bit of an outlier here. And so anyway, there's so many cool things you could do with this to manage your behavior. Back to the trade log. Another one of my favorite things about the spreadsheet is, like in the free version, you know, Craig talks about screenshotting your trades so you can go back and look at it. I think that's so valuable. So when I put this together, I was thinking about how can we take what Craig was talking about and being able to see the trades, but then also maybe see the wins together, maybe see the losses together, and still be able to have all this data-driven numbers, but not lose out on the charts. And so we have these, on the Excel version, you have the chart that you can actually hyperlink. So what's so cool is you can come in and actually click the chart, and this is a template, so it's not going to have probably a spread, you know, a chart, but you can click it and it'll bring you to this cool tab. And so there's actually some charts on here for demonstration purposes. And so this tab has your winners, your losers, and your not filled trades. And so what's nice is you're able to look at, okay, here's some losers in a row. And these are some of my early trades actually. And so I was able to look at these, and even though the price action is different, you know, this one's going down and then back up, and this one's kind of going up and then down, you know, I started to realize by looking at some of these things that I'm seeing maybe some of those patterns that I talked about. And so this is so great. Again, you could just come in and be like, oh, okay, you know, well, that was one of my biggest winners. Let me look at that again. How did I do that? You know, and you'll be able to see your chart right here. So for example, I actually have mine personally. I've been using it this month. I got my profit table. Definitely excited about that. My simple stats here, you can see, you know, 38% win rate right now, rocking the system as a newbie, but profitability, you know, brought in the $3,000 in P&L, which is I'm excited about for sure. And you can start to see, okay, like July 4th, for example, what happened here? Well, I went back and looked at this day, and that in America is Independence Day. Okay. And so Craig's laughing. That was not a good day for me. Okay. So I celebrated America and I lost $600. Okay. And so
you paid the markets and you paid the capitalism.
I did.
It was funny. That was the day that I alerted out that Bitcoin short that went full profit. So I'm sure that had something to do with it.
Yeah, no, exactly. But I didn't take. So, anyway, so this is so, because I look back at this and what happened was, if you look, I had a 3-day winning streak. For me, it was a really good winning streak. It was $1,000 in 3 days. And then what happened was this trade psychology started coming in, and I started making decisions not based on my rules. I had what Craig calls hot hands, and I lost a bunch of money. And so the value of this spreadsheet is to be able to go back and look at this and be like, okay, what's going on here? And so, so later in the month, when I had a couple more really good days, on the 15th and the 16th, I didn't trade so much after that, because I was like, oh, I don't want I don't want to do the same thing. And so I traded one trade on the 17th. I lost money. I said, I'm done. I'm just going to chill for a little bit. Right. So very, very cool. Again, we've got the screenshots. You can see kind of how I do that. It looks hard to see, but what you could do is zoom in and you can read it. What I like to do is weekly. You'll see there's a, I just did this. So there's a, here it is. So bear with me, boom. So there's this line right here. So what I did is on a weekly basis is I come in here and I actually just select the cells, and then I print them. I just print all of last week's trades, whatever it is, or monthly, or however you want to do it. And then I get it out on paper, and I'm able to actually like take notes on it and review my behavior and what I think, and then put my observations right back over here. You see I got a bunch of information in there, which is awesome. And so, I mean, there it is, Craig. I don't know if there's anything else you want to add or talk about, but it's been extremely beneficial for me, and I'm glad to help out anyone that decides to use it.
Yeah, I mean, like how much important do you think this has been for you being able to be profitable within your first like 1 to 2 months of trading?
No, that's a great question. Well, the number one thing I would say to that is it's been completely instrumental, because early in trading, you experience a lot of losses, and it challenges your confidence and decision to continue.
Mm-hmm.
And being able to look back at your losses and see areas of improvement, or look back at your behavior and realize where you can adjust to continue to move forward, that keeps you going in this journey of becoming better. You talk all the time about trading being very challenging, and we need an edge. Well, I think this is an edge that very few people will ever get. A tool like this, I've never seen one, and I'm happy to have it here as an Innovatrade product, because I believe in you and what you're doing here and with the team. And the other thing that I would say about how instrumental it is not fooling myself either. A lot of my trades have been on the lower frequencies, which you don't realize maybe how many fees you're actually starting to pay. And so being able to see a full, some people might think they're really profitable, but how profitable are they actually? And
Yeah.
you say that in Innovatrade, being able to trade like a business. Well, this gives you books like a business. This gives you analysis and the ability to review like a business. And like we talk about, you can't improve what you don't measure. And so this is a way to measure so many different points of data in a very simple way, where you really don't have to do a lot of work. You just enter in your trades, and then you just use the tracker. But now you can measure so many things and improve them.
Yeah, absolutely. It's you laid it out right on the table perfectly. So yeah, I mean, and just to sort of hone in on one extra thing, like you put a lot of work into this. We cannot deny that. This is an incredible tool that I think is crazy valuable. And, I think $47 is a very fair price to pay for something that can benefit your trading and, everyone's trading who uses this to that extent. So we wanted to make sure that we got you paid for this and compensated for this, because this is something that can provide value to someone for the rest of their life. So yeah, thanks for making the tool, man. And thanks for breaking it down for us inside this little module. Appreciate it.